Okay, good morning, everyone. It's currently 4:44 a.m. right here. Very early. I've been up back testing, as usual. The market condition right now isn't the best, right? But, there's still, moves that you can make use of, with the concepts that we, well, our concepts, the concept that, we use, the concepts that we alone have, no one else knows about, right? So, as you guys can see, this is the 50-minute time frame, right? For the 50-minute time frame, we always use which cycle? Which time frame cycle? We always use the daily cycle, right? Right, and we all know that the daily cycle is comprised of 4 sessions, right? So this shaded area right here, this would be the Asian session, right? And this red shaded area right here would be the London session. So over here, I have the NASDAQ 100 futures, right? March 2024 contract, which will be expiring next month. And on this side, I have the E-mini Dow futures, March 2024 contract, right? So as you guys can see, we have SMT at these lows, but this is not any regular SMT, right? This is sequential SMT, right? Which is the SMT that, we pay attention to, right? That's the SMT that we use, the main one. There are other ones, but this is the best, right? And over here, right, Dow Jones, we have in Q2, right, which is the London session, we have price failing to break below this low and this low, right, forming a failure swing. Due to the fact that the NASDAQ traded below this low, right, and we had price failing to break below this low, that created SMT. But what really, makes it special, remember, is the times, right, that each low forms, right? So we had here price breaking below this low while trading below the true day open, right? Remember, the true day open is 12 a.m., right? Which is this time right here, right? And remember the setup that I taught you guys, right? You remember it, right? This is literally it, but using different times, right? And a different cycle. So as you guys can see, we had price break below, right? Trade below the true day open here, create sequential SMT. Afterwards, you had price break above, this candle, right? This specific candle right here. Price traded up, drop back to the opening price, right? Dipped into this fair value gap, but barely. And then we had price move, right? So remember that we use this right here, right? This opening price, right? Whenever price breaks below true open, right, goes above it and comes back down. As long as there is sequential SMT, you can use this, pair it with a fair value gap, right? And remember that due to the fact that this candle right here, right, is where the true open, originated from, and due to the fact that this is what a traditional breaker would be, this specific up close candle right here, this would be what? This turns into a high probability breaker afterwards. So price broke below, broke above, once price fell into this fair value gap below the true open, that's when you would buy. And that's not all that's here right now, right? I'll turn the crosshairs on so you guys can see, right? So at this time at 3:45 a.m. this morning, right? Remember what I introduced you guys to, and we'll go more over this, right? This swing low right here, right? You guys can see this swing low right here. It is up closed, right? You guys can see that it's up closed. And if you look at the swing low that formed at the same time in Dow, it's down closed. You guys can see that, right? Okay, so this is a high probability swing low, right? This would be, your highest probability entry, right? Even if price closes here, you could enter on this candle, put your stop below this candle right here. And this is a type of high frequency entry, right? So if you would have bought anywhere here, right, and put your stop below this fair value gap, because due to the fact that there is a balanced price range right here, right, there's not a double fair value gap, right, there's another one here, right, you wouldn't expect price to go below this, so you could put your stop below this fair value gap right here, and just exit above this high, collect 3 R's. Easy as that, right? But you need to practice tape reading, and back test, which is what we're doing right now, just back testing, right? You look back at the exact model that we talk about, right? This is what we always talk about: sequential SMT, price breaks up above a breaker, which the opening price of that breaker is the true open, and then price drops back, it just touches the true open, which is a breaker at the same time, so it's a high probability breaker, and then it just expands. Now, we're going to look, deeper into price action right now. So right now we're just, this is like X-ray vision per se. So now I turned on this indicator, right? As you guys can see, now we have more, these are some invisible levels, right? You're not going to see these without this. These are true week opening gaps, and no, my bad, not true week opening gaps. That's something else. So these are new week opening gaps and new day opening gaps, right? So right here, you can use the color code and match. Let me change this one to green. Okay, so this green right here, this green, you see this level? That's the new week opening gap. This gray level right here, these are previous new day opening gaps, right? If you need the settings, you can, you just use this. So whenever you have, the levels that we would be looking for overlap with these, that makes it even higher probability. Because, just look at this. Look where we had this low form, right here. If you're really cheeky, you could literally go in right here and, just look for an entry here, right? Literally. So we had price trade below sequential SMT on the new day opening gap, then price traded above, right? Drop back, dip a bit, below the new week opening gap, right? Why? Because it needed to find this opening price right here, which is the opening price of Q2, which is the true day open, right? And the true day open overlapped with this new day opening gap and this fair value gap and this breaker, which made this a high probability entry, right? Even though right now we are not, in the best market conditions, right? We're not in the best market conditions right now. This is like really advanced, this level of price action right here is really advanced to see this, right? Because if you zoom out, you won't see any higher time frame PD areas that you could use, right? That would lead to you, being in the right, trading in the right direction. So, yep, just wanted to give you guys a bit of a, update on, current price action right now. So we currently have liquidity above this high right here. You'll see price, wants to get that before doing anything else. But currently, the best move is already done, right? And we have liquidity below this low too. So apart from this, anything else, trading anywhere else would be high risk and low probability. So yes, and until next time, I'll talk to you guys, right? Have a good morning.
All you are to me is a bleak obsession. I am the mark in the tint on burning the street.